when they're getting tax advice, and this is huge. I mean, we are a tax strategy firm. We prepare people's tax returns, which means I sign that return when it goes to the IRS. So if we've told you something wrong or did something wrong, I'm in as much trouble as you are.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik, and with me, as always, is John Cohen. How we doing, bud?
We are good. We're hanging in there. Another day, another dollar.
There you go. Yeah, it's. I went to I don't know if I told you. Went to a restaurant for the first time. Actually, sat inside in about 3.5 months, so that was different. It's been a long time since we've been allowed to do that. But yeah, it was good. It was good to be back out in the world, feel a little bit normal, instead of bringing in and eating inside for the whole time. So that was a nice change of pace. Have you been out yet or no?
No, not yet. We are probably, my wife's birthday is July 15th, and she said we're going out for my birthday. I said, no, don't have to tell me twice, right? Let's roll, because it's we've been ordering stuff and eating in our backyard and stuff, but it's getting it's going to be nice to get out.
Sure. Baby too, or no?
No, she'll stay home. Either my mom or her mom will watch her. Not yet taking the baby anywhere.
Makes sense. I get it. Wasn't sure if it was a not quite comfortable or just trying to get away for a little bit since you've been there 24/7 for the.
So I would say my wife is she's ready for a vacation by herself. Not leaving me well. She's probably ready to get out. Vacation from the world. Me, not so much yet, but no, this is just it's a mix of she doesn't want to she doesn't even like bring the baby around a lot of people still. Just you never know.
Yeah,
but
makes sense.
Yeah, she wants peace and quiet, and then she'd probably like to go out to dinner without me as well. But we'll see.
Yeah, she can't get that lucky. But beautiful. So glad to hear it. Glad to hear you guys are doing well. But we got an awesome episode today. Really great guest. I think we're going to learn a ton. Going to talk about a lot of different things, touch into the tax side of things, which is something I'm still learning a ton about. And with the extension, I'm sure this is going to come at a pretty good opportune time for people, as well as the halfway point for 2020. So if you want to start doing some things for this year, because it's too late to change last year, you can start doing that now. So that being said, Warren, thank you so much for joining us.
Thanks, guys. It's great that you had me. Thank you.
Yeah, beautiful. So I want to take a couple minutes and just introduce yourself. Tell people a little bit about who you are, where you're from, what you do.
Sure. I'm Warren Taryle. I am the founder of Taryle Accounting, and we are a tax strategy firm that specializes mostly in real estate, all aspects of it. I'm a CPA. I have a master's degree in taxation, and I'm not saying that to brag or anything. I just want you to know I have no personality. So yeah, we kind of view things differently than a typical CPA firm. We look at tax strategy is what we do. And what we mean by that is the tax return, we kind of view that as the necessary evil at the end of the planning process. So, we plan. And then when it gets to, now this time of the year, because of the COVID thing, this time of the year, we just got to get the numbers on the right spot in the forms, but we should already know what the answer has been kind of all year long because we've been planning for it. Real estate's a huge tool for that.
Mm-hmm. Gotcha. No, I think that's important. I think one of the things that I'm more focused on now, as I've heard more people like yourself talk, is, thinking about your taxes a year or two in advance and planning for it instead of, waiting until typically March, but now, June, July to kind of figure it out, because there's only so much you could do in reverse, right?
Exactly. And when you're in the real estate space, that's golden for tax. I mean, it makes my job so much easier. Actually, I shouldn't say easier. There's so many more opportunities for us. Actually, it makes my job harder to choose from the right opportunities. But when you're in the real estate area, especially if you're doing it full time, or we can get you to that stage, it's golden. I mean, some of my wealthiest clients I have basically don't pay taxes because they do enough real estate investing, and it's the way the government wanted it.
Yeah. No, I think that's important, right? One of the things that my dad actually taught me pretty early on about taxes and the government is basically the way they work, and the way you can pay less is they incentivize you to move into different things that they want you to do. The perfect opportunity, example is opportunity zones. They create different rulings, different advantages to push people towards certain directions that they wouldn't normally do without those certain incentives. So when people hear that, Warren Buffett pays less taxes than his secretary, right? That's like the perfect example, because I think he said that 10 years ago. There's a reason for that. It's not like he's cheating or has offshore bank accounts. It's because it's the way the system's set up. He finds a way to fit in the system. And yeah, I'm sure he finds loopholes too, just like everybody else. But, they're doing it for certain reasons to push you in certain directions. So it's not a negative thing necessarily when you hear that. It should be a positive thing, something you should strive for.
Exactly. There's things that are in the, I want to use the term greater good or public benefit, right? That the government could either do themselves, or they can incentivize, I like to say bribe us to do instead. And one of those things is obviously rental real estate. And if we think just in the residential space, forget the commercial side, but just in the residential space, when you're providing a rental house for somebody, what are you doing? You're providing a place for them to live.
Mm-hmm.
If the private sector didn't do that, the government would have to do it. And we know what a horrible job they do of doing it. So somebody was smart enough, and that doesn't happen very often, but somebody in government was smart enough to say, hey, let's provide some incentives to get the private sector to do this for us.
Yeah,
that's a great way to break it down, because people don't think of it that way. People look at rent, oh wow, you own real estate, you must be a millionaire. Well, maybe not, but you're right. If you break it down in layman's terms, you think about it. If it was not done in the private sector, add another thing to the government, that ain't going to work for anybody, because they can't do what they're supposed to do, let alone, provide millions of more, doors or rooms for people to live in. I mean, look at, New York is a perfect example of like all of the housing authority buildings falling down, lead paint and water system. It's a disaster, and they can't figure it out because it's fucked 6 ways from Sunday. So, when you break it down that way, it's like, oh wow, yeah, no, look, I am doing a good job. So it's a good way to look at it. No one's ever said that before, so that was an interesting take on it.
Right, like in Blues Brothers, right? We're on a mission from God.
Well, it's interesting because it's, everybody's talking about affordable housing right now, and there being a shortage, and that's when we had Evan Holiday on, and he's in that space. That's all he does, and he was talking about how they create certain incentives for him to basically have different tax credits to be able to build brand new apartment buildings for a fraction of the cost, because certain banks have to buy credits. And I don't want to get into it because I barely understood it. That is, if you're curious, go listen to the episode. But it's the same thing. And it was very interesting to hear too, when SpaceX just launched a rocket for NASA, I think it was Neil deGrasse Tyson was talking about how this is a good thing, because it's something the government does all the time, is as they're looking to expand things, they go into the private sector and basically pay them because they're significantly more efficient, because they're motivated by profit. And I think one of the examples he gave was like, I think airlines fly a ton of packages around the country for the postal service in like the belly of the planes, because they're already flying. It's significantly cheaper than for them to try to come up with their own fleet of, planes to go out and do it themselves. I didn't know they did that. I just figured they had their own planes, but it makes a ton of sense. And when you come back to the public housing versus private housing, yeah, I mean, to John's point, some of the stuff you see in New York is god awful. It's terrible things to live in. And yes, there are private owners too who slum the crap out of their apartments. But I would say by and large, most private owners do a much better job of upkeeping their complex and their housing than the public space. And I think if there was more of an incentive to house to the affordable community, a lot more people would do it and be much more readily available.
Yeah, if the government's doing it and they're being the slumlord, you don't really have an alternative. You can't, nobody's going to come and force it against them, right? If you're a private if you're a private landlord and you're doing a lousy job of maintaining a property for people, you're in trouble.
Yeah.
I mean, sooner or later, you're in trouble.
100%. So let's segue a little bit into some other stuff, because we got a little bit away from kind of your expertise, but I think it was an interesting topic. So one of the things I'm always curious about as I'm starting to learn more is, what are some things that a person can do to have a better tax, experience, to be better prepared for filing their taxes, come up with better strategies for their tax stuff? And I know a lot of it is obviously individual driven, case by case basis. But I'm sure there's some best practices that you've seen or encourage people to do that would be helpful for anybody listening.
Well, sure. And it's all about planning and talking to somebody that knows what they're doing ahead of time and looking at your individual situation. It is truly not a one size fits all. And the one thing I like to tell, or want to tell everybody when they're getting tax advice, and this is huge. I mean, we are a tax strategy firm. We prepare people's tax returns, which means I sign that return when it goes to the IRS. So if we've told you something wrong or did something wrong, I'm in as much trouble as you are. If you read a book, or don't put down a podcast or listen, but some of these guys that are giving out advice on taxes and they're not actually preparing returns and signing them, it's no skin off their back, if you get audited and they told you something wrong. So
it's a lot easier when you don't have to put your name on the dotted line, right, telling people something to do, right? I'll teach you what to do, but you're taking all the risk. So I think that's an amazing piece of advice right there. Just, like you said, the accountant signing on the dotted line is the one that's, he's putting it, the final seal of approval on it. Yeah, you're going to get in trouble as the person, but, he's also going to get in some trouble too. So that's skin in the game, maybe not monetarily tax-wise, but there's skin in the game from a totally different perspective.
Oh yeah, it's definitely monetarily when they start seeing some of the penalties that come around. But and the IRS is much more interested in going after preparers than the individuals, because if they can get one guy who's doing things wrong, they can take down a whole bunch. So anyway, that's another segue. Sorry, we can do this a lot.
No, I think that's interesting. So what you're saying is that if you are getting audited, they're not only going to look at the person whose tax returns they're going to look at the person preparing it, because chances are if you're doing something sketchy for one client, you're going to be doing a whole lot of other sketchy stuff for a whole lot of other people.
Yeah, I've seen a few audits that way, where we'll have somebody come to us and because they're under audit and they said, hey, my other accountant, I didn't really trust him, but he said I should do this. And now I'm getting audited. What do you advise? And we look and we see, well, pretty much the reason why they got audited is like virtually everybody that was prepared by that person got audited. So sometimes the IRS will look at that situation. They'll say, yeah, this guy's promoting, let's say sometimes promoters, right, of some kind of a tax scheme. And there's really no need for that, right? Let's bring it back to the tax code. There's really no need for that. The tax code was written with so many incentives in there that I know this isn't going to sound like the most sexy tax advice you can have, right? So what are you doing to save taxes? Oh yeah, so I'm really out there. My accountant told me to do what the government wants me to do. But truly, they wrote it in the tax. I keep pointing back there. You can't see it, but I have books back there. They wrote it into the tax code, like we said earlier, because they want to incentivize us to do things. I mean, in real estate, what's our biggest tax break of all? Depreciation, right? Depreciation on an asset that appreciates makes no sense whatsoever, except for they're incentivizing us to do this.
Yeah, it's crazy because, been doing this for 4 or 5 years, whatever it is. And depreciation is such a normal thing now, but you don't think about it, right? Depreciation on something that appreciates literally makes no sense. No sense.
And, we like to make fun of the government not making sense, but I think they know what they're doing here.
Yes. No, it does make sense from a standpoint of it pushes people towards that mold. Do you feel, though, because we touched on opportunity zones a little bit, do you feel that it was almost too beneficial? So too many people sat on assets and they felt there was too many unrealized gains for people, and that was a way to kind of push people back towards transacting more? Or do you think that was more aimed at other investment vehicles like stock market, bonds, whatever. And because there was no benefits to it, people just sit there and they don't do anything with it.
Yeah, I think it was definitely aimed more towards other asset classes, even people selling their own businesses.
Mhm.
I think this was really genuine attempt to say, how do we bring capital into certain areas, and and using the tax code as an incentive. They didn't want to restrict, they didn't want to make it like a 1031 exchange, right, with all the rules and stuff that are on there. Let's open it up. One of the problems or challenges, I should say, with real estate is, you have to fit a good niche to make real estate work best for you, right? Real estate professional and all that kind of stuff makes it work best for you. And if your goal as a government or as an agency is to drive as much capital as you possibly can, you want to make it as open as possible. So you want to invite capital sources from everywhere.
Gotcha. I think that makes sense. And going back a little bit, we like to jump around. For somebody that's looking to start to have better advice for their taxes, maybe look to hire an accountant for the first time, or thinking about switching, what are some of the things they should be looking for in somebody that is in real estate and can provide them, the best bang for their buck or best strategy going forward? What are some things they should be doing? What questions should they be asking? What things should they be looking for?
Well, other than contacting me, but no, really, you really want to look for somebody who's going to give you advice and strategy that's going to be working with you throughout the year, not just at tax time. Like we keep saying over and over again, right? Once we get past the end of the year, we'll do the best we can with what you got. But if we can work ahead of time, we're doing so much better. And just creating that strategy, and for a lot of people, even people transitioning and just getting going in real estate, moving that direction from other places, getting that plan in place is important. And it's not a super detailed plan when you're first started. It's more of laying out those steps, right? And I mentioned in passing, and I assume a lot of your listeners know, the real estate professional and all that, the rules about passive investing and all those things. So what do we get? How do we set up? Maybe there's no way 2020 I'm going to be a real estate professional. It's not going to work. But how do I lay the steps that I can be there by 2021 or 22? And what do I do now so that when I do become a real estate professional, I get the biggest advantage and don't waste a bunch of stuff now, if that makes any sense whatsoever.
No, I think it does. Anyone listening, the key when it comes to your taxes and planning, it's not, it's almost too late. And that's not necessarily 100% true, but it's almost too late when you come in at the end of the year or March and say, hey, let's figure this out and sit down for an hour or 2 hours, how almost everybody does it. But if you can have someone in your corner that, while you're looking at transactions, or while, hey, I'm thinking about buying this property, what can we put in place, when this closes in 6 months, or how do I go about it, or how do I get to the finish line of being a real estate professional or whatever it is, that's how you're going to be most advantageous. Because I know what happens a lot, from, the real estate, investor side, and writing off a ton of stuff and passive and active and all that good stuff. And it's going to lead into a question is that, sometimes you just end up not paying taxes because you have a lot of depreciation or write-offs or whatever it is. But the other component of that is if you're looking to buy a house and if you're looking to establish your life, you have to take that into consideration as well. So I think another major question, or any listener wants to understand, is it's great not to have to pay taxes or pay less in taxes with the benefits that a real estate professional and or depreciation, all that can offer. But having an accountant or a tax strategist in your corner where you can say, hey, I'm looking to buy a house and I have to go submit tax returns to a bank and I don't have a W-2 job, or I'm transitioning over to be a real estate professional. That has to be a question that's asked, because if after you transition, I'm going to buy a house, it may be significantly harder. So can you talk to that point, or tips, tricks, or things that you guys like to advise on for anyone that is looking to get a mortgage, on a primary residence, not necessarily a commercial mortgage or something like that? But can you talk to that? Because I think that's always an interesting topic. I know I went through that process over a year ago, 2 years ago, and it was, it was fun because I've been doing real estate since 2013. So my income's, my taxes, it's a debacle with all the K1s and 25 different entities. So it was extremely challenging when the bank's like, oh, I need every business that you're a 25% owner. And I'm like, well, I don't think Dropbox is big enough for this file. So how do you want me to get it to you? So can you talk to that point? Because I think it's an interesting thing that I think a lot of our listeners will, appreciate.
Yeah, definitely my job doesn't seem to be making people's life any simpler. Maybe that's expensive, but no, that's true. And one thing you're going to have to make up your mind, you're not going to be a retail person anymore when you go into this world, right? You're gonna need a mortgage person that knows what they're doing. You're not going to go to a ditech.com or something. Hopefully they don't sponsor you, but but you're going to need somebody who actually has some experience and knows what they're doing, and you're no longer just that retail customer for almost anything anymore. You're a unique individual now, a business owner. Remind me that I have a pet peeve about that, but anyway, you're the lending process is going to be more difficult. And one thing, and we can say it here because it's just us talking, right? So you can't always amend a return. I don't recommend always doing a lot of amended returns. It does, open you up for scrutiny one more time with the IRS and all that. But we're doing things right. And I've had many times where we've looked at, somebody needed income. It's like, well, let's not necessarily, maybe we don't take the bonus depreciation this year because you want to show your depreciation higher and some other things, and then we can come back at another point and maybe do an amended return and change some of our positions. Now, some of them we can't change once we file the return, even on an amended return, but others you can. And so that's all back part of strategy and why one size doesn't fit all.
No, I think that's important to realize because, sometimes, like you said, you're no longer a retail client. And I know I went through this process, and the arguments I would get into with banks and even mortgage brokers, they would look at me and I'm like, guys, that is not, I didn't lose $500,000 last year. That's not what took place. But, sometimes it's, you got to find the right person, because it was like pulling teeth. And that's something that people have to understand. And when you become not normal in retail, and you can walk into a bank and give them your 2019 returns, like, here you go, I made 100 grand, 400 grand, 50 grand, whatever it is, now you're going to have to finesse that situation. So, whether it's an amended return or whether it's paying the reaper and saying, hey, I'm about to become a real estate investor and I'm going to have so many benefits in the future. Let's file something normal this year, eat it, because it's going to make my life easier, right? And that's the one thing that, speaking to someone saying, hey, do you want to open yourself up to scrutiny in the future? Or listen, pay your 50 grand, get your mortgage, and we're going to make up for this 10 times over the next 5 years, 10 years. So it's something that, just understanding that and speaking with your advisor can save you countless hours of banging your head against the wall in the future. And I don't think there's enough accountants or enough people that understand that. And they take the easy way out and they go on, QuickBooks and, all those softwares online and, easy file. They're like, oh, look, it's got the green bar comes up, says you're not going to get audited, but you also just wrote a massive check. So it's sometimes people don't want to pay for it, but they pay for it. And that's the delicate balance that, I think someone from your standpoint, here's your elevator pitch, right? Like, why pay for it when I can do it myself for cheaper? And there's a million of benefits, but what do you say to those people? Because I think everybody's trying to save money when they realize that paying someone as an advisor may actually inevitably save them more money.
Right. And you know what? For maybe 95% of the people out there in the world, you shouldn't be paying anybody to do your taxes because, hey, you fill in your W-2. Yeah, I remember you used to be able to go on the telephone. See, I'm old. So you used to be able to go on a touch-tone phone, punch in your social security number, punch in a couple of digit numbers from your W-2, and you could file your tax return that way before they had online filing. So yeah, but if you're doing anything, if let me pick it back here. When we do a tax strategy for people, and this may make sense if I play it out here. When we do a tax strategy, I look at it as, remember when you were a kid and we had those little puzzles where you slide the tiles around to make the picture? Mm-hmm. You always had to have at least one open space, right? Or you couldn't slide things around. If you own a business if you are investing in real estate significantly, if you got a one rental, a 3-2 rental property somewhere, it's okay. But if you're doing real estate investing significantly, that creates that open space, and we can create something from that. If you don't have that open space, do you need to pay somebody to do your tax return? No. If you have that open space, at the very, very least, you need to talk to somebody about what you're doing, and then you can decide if you can do your own tax return or not. I talk to a ton of people and say, hey, here's what you need to do. Here's where from where you're at, this is where you should go. And when these things happen, that's when you need to call me again and we can work together. But
that's the brutally honest advice, right? Sometimes it just doesn't make sense to try and get creative, and people need to hear that. And it's like, hey, I'm going to benefit you much more when I'll give you, go do these steps, and then I'm going to really, make an impact. But for now, don't overcomplicate. And I think people sometimes, don't know that, and they think too much about it. So there you go. There's from the expert himself. Guys, make the call, ask the questions. Don't just assume you're the smartest person in the room.
So you want to be really brutally honest here, and I probably shouldn't do this, but to be really brutally honest. So there's different groups of people out there, and especially people in real estate investing world and education world, and they want to learn and learn and learn. And there's so many people, and you've probably heard this before too, but they plan to plan to plan to plan, and they never actually take any action. And one of the things that they do, and I'm going to get in so much trouble for this, one of the things that they do is they'll hire somebody like me to create a strategy for them, because they're not actually having to do anything. But they feel inside, oh, I'm working on my real estate future because I just spent this money and did that, even though they've really literally taken no action other than that. I tell people this all the time is, look, create a tax problem first, and then I'll help you make it go away.
So I love that, because I had a conversation yesterday and we were talking about, someone called me and they asked me, what CRM do you use? So I said, well, what are you trying to accomplish? Because there's nothing perfect out there. And you can watch every single video and sign up for free, and there's 1,000 CRMs. So I just said what I like to say, done is better than perfect. Pick it and do it, and figure out if it works for you or not. Yeah, maybe you spend a couple dollars and it's not what you thought, but if you try and research the perfect, you're putting yourself into a box that you're never gonna get there. So, we had a couple people on the podcast recently. We were talking about, the best investment you might make might be the one you lose all your money in, because you're going to learn something from that experience. So, coming from someone with that, create the problem and now let me work on it, because that's where I'm going to excel. But if you don't create the problem, you could spend a shit ton of money and you just mentally think you're becoming a real estate investor when realistically you have no intentions of getting there. So do it. And I think most people don't, like you said, you're going to get in trouble. Not on our podcast, because people don't talk about that. People like to, no one says the truth when it comes to stuff like that. It's like, hey, fuck it up, make a mistake, give me the problem, we'll get a solution. And if not, well, we know what we won't do going forward. So right. I think that's important for people to realize, because so many people get stuck at the taking action phase and they never actually take the action. They just pretend like they're taking the action, which is something, to me, I tell people all the time, just do it. Just do it and mess it up.
One of my really good friends has this saying, and I'd repeat it to him. He forgot he said it all the time, but I say anything worth doing is worth doing poorly. And that just meant if it's really worth doing, just get out and do it. You're going to screw it up. We all screw everything up. But if it's really worth doing, just do it.
Yep, absolutely. I agree 1,000%. I love that. I am a, what is it? Ready, shoot, aim, or shoot, aim, ready, whatever it is. I am definitely that person. It's part of the, successful, not, yeah, I've done stupid shit and everybody has, but I'm more along the lines of bull in a china closet. We'll figure it out. It might take a little bit longer to get there, but I can't deny that approach, right? It's, listen, there's the fine-tuned, sniper, but it's a lot harder to get there. And I think most people want to be that and they want to be perfect, but there's no such thing as perfect in, the tax world, in the real estate investing world, in, anything, right? This is not, we're not going for perfection here. This is not pitching a perfect game or, whatever it is, you're going to make mistakes, and you got to overcome them, and you got to get comfortable with that. And starting small or starting whatever you believe is small is fine if you can educate yourself each and every day moving forward and advancing it downfield. So I love that.
Yeah, I mean, for me too, same message, slightly off topic. When we started doing this podcast, I learned it really early by watching other people. And when you go on social media and you see these people with millions of followers, you're like, oh, their stuff looks so good. It's so perfect. It sounds so great. You're seeing 5, 10, 15 years worth of work. And it hit me one day because at the time I was really into the Joe Rogan podcast. And I still watch it sometimes, but not as much. And he posted his first ever podcast video on his Instagram, I think. And it was the most god awful video I've ever seen in my life. It was hysterical. It was like they didn't realize they were recording for like 2 minutes, 3 minutes. It had like this weird overlay graphics of them, and it was blurry as hell. You couldn't even tell what was going on. But you look at his stuff now, and he's, you know, consistently top 5 podcasts in the world. Just signed $100 million deal with Spotify. You know, that's what it's about. And so for me, you know, it was just getting started. And you can look at our first podcast with John and I and read, it's terrible. I mean, I was nervous as shit. The intro was terrible. We're in John's room where he is now in some table and some stuff. And yeah, it just wasn't good. And like, as you go along, like there was a period where, you know, probably episodes, I don't know, 6 to 20, our video looked really crappy because we had the wrong webcam, but we just continued to do it because we know, you know, 95% of people, maybe now they will, aren't going to go back and watch episodes 10 through 25 because we're on episode 70 or whatever it is, or 72.
If they are going to go back, they already love you. So
exactly. So and that's the point. It's, you know, we knew we were building something bigger than 10 episodes or working on something bigger than 10 episodes. So doing it and consistently doing it and figuring it out over the long time was much more important than creating the perfect plan out of the box. And I think to your point about the tax strategy, like you were saying, it's more important to do it and end up with a problem and fix it than to plan for something that hasn't even happened yet or may never happen that you don't take action on. And I think that's hugely important.
Right. And that's, you know, people ask me, what's the number one thing you see people do wrong in real estate? And I say they don't start.
Yep.
No, that's awesome.
So we've been talking a lot about taxes.
Yeah. It's important though, especially now. So I'm curious, as we bring it up, with COVID and everything going on, and it's June 30th, for anybody listening, what has it been like the past couple months for you in the tax world? And as we come up to the extension for filing taxes, is it, you know, same old, just an extra couple months? Is there a lot going on that's been different? Are a lot of your clients, you know, freaking out, doing things differently? What have you seen going on?
Yeah, it's been quite the mixture, right? So it all initially started with my freaking out because, you know, this whole thing hit right in the busiest part of busy season, and our firm as a self, we were on a transition stage where we were upgrading a lot of our technology, and with always you're saying, all right, let's do it after April 15th, at the deadline. Let's not be crazy and do it in the middle of tax season or right before it. Let's do it right afterwards. And then COVID hits in like early March, end of February timeframe when we're just dying. And so we went through this little panic of let's implement all the new technology now in case we get kicked out of our office and we have to work remote and all these stuff. So for us, we kind of fell into the little mini, or I should say us, me, my staff was like, Warren, you're freaking out, stop it. So we did that. Our clients kind of run the mix. So one of the things, and it's weird, right? We're always looking in the rear when we're talking about doing tax return strategy. We're looking forward, but at that time of the year, we're looking backwards. And so all the information coming to our office is 2019 information. And I got to tell you, most of our clients had extremely awesome 2019s. They were killing it. And all of our projections that we were doing to the end of the year and the beginning of the year, 2020, they were going to even be killing it even more. Mm-hmm. And so it just like just the hard stop. It's just weird. Now we specialize in real estate. We still have a lot of people doing other stuff. It's like real estate and something else. And so there was a big hard stop trying to figure out what's going on. And then we did this really quick transition into, we started getting people wanting a lot of information on the EIDL loans and PPP and what some of the tax provisions were in the CARES Act and all that. So went back to trying to stay on top of all that information. Changed like every hour for a while. We were keeping our Facebook page updated with the latest information. We started even doing every Wednesday afternoon conference call where we just answer people's questions on PPP, EIDL, all those things. You didn't have to say who you were or whatever. We just try to answer people's questions as quickly as we could. And so, yeah, it went into almost, and that really has nothing to do with tax, but people came to us for that. And so we figured it out, and we're pushing a lot of people through, helping them get their PPP loans. And then people went through the process of applying for the EIDL loans and getting their, getting that advance check. And then they got the documents for the EIDL loan. I don't know if you know anybody who's gone through that process.
No.
It's the worst loan you've ever seen in your life. I mean, you sign up for this loan, you're signing your life over to the SBA for 30 years, basically. You can't really even take distributions out of your company until you pay them back. It's a horrible, horrible loan. But if you're desperate to keep your business going, you're going to do it. And I think that's why they made it so horrible.
Yeah, I mean, it makes sense. I think it's interesting that you brought that up about, stuff that's a little bit out of your purview. And I think I see that a lot across a lot of different portions of this industry, whether it's us, tax, accounting, property managers. You've got to have a little bit of information or be a little bit of dirty outside of your niche or what you're good at to help people that you work with, your clients, your investors, understand what they're getting themselves into, because there's such an overlay from different parts of everything. We've got to understand the tax code a little bit, or understand general ideas of what's going on in tax, because if an investor comes to us and says, hey, I want to invest with a self-directed IRA, we have to be able to say, yeah, you most likely can do that, but most likely also going to have a UBIT tax. Just understand that. But we also encourage you to go speak to an accountant. But if we didn't know about that and we just said, hey, yeah, it's fine, give us the money, we're not doing them justice by necessarily taking their money without them fully understanding what's going on. Is it technically our job? No. However, being able to, add a little bit more to what we do, I think is so important. So I think it's really interesting to hear you do a very similar thing when all this stuff came out.
Yeah, I mean, you've got your clients, they trust you for stuff, and and it's good to have a good network of people that you can rely on to fill in those places that you're not 100%. I've got some really great relationships at some amazing banks, and they were right there helping me all the way with any of the PPP questions I had that they were handling. They knocked it out of the park, honestly.
Yeah, and I think that's the thing. It's having those connections where, if we don't necessarily know the full answer and they want to talk with our accountants, we're happy to do that. They can't necessarily provide them, 100% of the best advice specific to their situation, but they can at least do a little bit more than us. So it's, we can go to a certain point. We have other people that can get them to another certain point, and then you have, that's it, right? You reach kind of what you're comfortable doing without them being your actual client and, willing to put your name on the line, so to speak, and get compensated for it. But having those resources, knowing it yourself, you're just providing a better service for people. So I think it makes a ton of sense.
Go ahead.
No, sorry. You first.
I was just going to say, I was so glad you brought up UBIT. It's such a we have that you're up front with your people with that, which is so awesome, because and they start falling back to us a lot of times, and then we're the bad guys because they didn't tell me about it. It's like, and there are some ways around it. Maybe talk about that later.
We've educated ourselves to the best that we could, and I tell people all the time, you want to talk to another sponsor, just ask them about UBIT, 85% of people probably don't even talk about it, and it could be a significant dollar amount. But I was going to ask you, who's the perfect client for you guys, right? Is there a too big? Is there a too small? Is there consulting? What is your sweet spot? Where do you guys excel, or who do you want to contact you?
So small businesses are really where we're key. So like I said, in the real estate space, we've got a lot of syndicators. We've got developer. See, people like to call them fix and flip. We prefer to call them real estate developers, and it looks better on the tax return too to say we're developer, which is really what they're doing, right?
Yep.
And we got a lot of land guys, a lot of guys buying and selling land. So that's kind of a big area for us, but we're also, our clients kind of led us into other fields. Like, it seems like not everybody does only real estate, right? They're doing real estate and something else. So it's like, hey, I've been doing these apartments, and you've been helping me out. Can you help me with my pharmacy that I have? Or it's like, sure. And so we're starting to get some other industries. A lot of information businesses too, online businesses are great. Because going back to the beginning when I was talking about my little puzzle where you got to move the tiles around, and we need that open space. Well, having a business creates that open space. And for some people who are working and trying to bridge into something else, creating some kind of an online business is a very easy bar to come over to get us that little space to start playing. And so I guess to answer your question, if you have a business, or if you're investing, and I'll generally say significantly investing, then you're a good client for us. If you're a W-2 guy and you're happy that way and you're in the stock market, we can prepare your return as well as anybody else, but we're not going to give you, it's not going to be worth it. But if you feel like you're just like, all these other people don't pay taxes and I do, what's going on? Let's just talk and figure it out. That's who our client is. You got to want to be doing something on the entrepreneurial side in order for us to be able to help you.
Right.
I think that's really good. Is there anything with COVID that's happened that's actually changed how you guys are looking at tax returns, preparing tax returns, doing anything different? Or was it really just more of an extension because of everything that's going on and just threw everybody for a loop?
Well, no, that's a great question, because a couple of tax laws changed retroactively temporarily. Mm-hmm. So number one, the biggest thing that we had to do is, and this might get a little in the weeds, but
go for it.
So net operating losses. So net operating losses, if you have on your personal tax return, you end up with negative income. Maybe a lot of depreciation from rental property, something, you have negative income. Under the new tax law, and I say new in quotes because it's been under the tax law that started in 2018, we should say it that way. Mm-hmm. Net operating losses, you used to, before that, carry them back 3 years. And if you had a loss 3 years, you can apply it to income from 3 years ago and get a refund. And you kept applying it, and then anything additional, you can go forward. Under the new tax law, they got rid of the ability to carry it back. So you can only carry it forward. And on top of that, you couldn't use all of that net operating loss in the next year. They couldn't offset all of your income, and only 1%, and it would keep going forward. During the CARES Act, they changed that, and they said you can now carry it back again if you have a loss in, and I'll listen to this part, because remember, CARES Act passed beginning of this year, or middle of this mm-hmm. year, a couple of months ago. If you had a net operating loss in 2018, 2019, or 2020, you can carry them back 5 years ago and get a refund. Well, 2018, everybody's already filed. So, and they put a deadline. Sorry, we're doing this a little bit too late, but they put us a deadline of, if you have a 2018 loss, to amend and carry that back, you have to do it by the end of June.
So people have a couple of hours, and by the time this
Yeah.
comes out, they're never going to know about it.
Right. So,
but that's why you need advice in your corner.
and so we had to go through in our system. We were able to write a quick little code to analyze our 2018 returns in our system to find anybody who had net operating losses, and then go back, and we had to kind of quickly, because again, we're in the middle of doing all this other stuff, we quickly had to figure out, was there a benefit to any of these people? Some of these people, we didn't even have 5 years old tax returns we needed to get from them, and just to look and then see, all right, do you want to carry it back? And so we swapped out a few of those and got them out, and got people getting the cool thing is, not only are they getting a refund from 5 years ago, the IRS is paying them interest on it, which is funny.
Fantastic.
So that's I was going to ask, when it carries back, they just give you a refund for what you had paid.
And so even better, like if you had penalties back then because you didn't pay enough taxes in or something, it offsets those penalties too, because now your income's lower. So it worked really good. And now for 2019, with knowing that rule, the rule before we could carry back again, knowing the rule we can only carry forward and we're limited a little bit in our carry forward, we sometimes made different decisions on how aggressive we would take depreciation or other things on someone's tax return, because maybe we don't want to create a big net operating loss now, because it would be better if they just had more depreciation next year. But now that they changed the rules, it's like, no, now even the returns that we had already gotten done at that point, we had to go back and look at it. It's like, would it have been a better idea to take more depreciation now so we can get the carry back? So so that's one thing. And it's kind of not as easy as it sounds to do that when you've got like 1,500 returns you're going through or whatever. Thank God for software.
Yeah, I can imagine that's got to be pretty daunting to go through. And then, like you said, everybody's case is slightly different. You can't just slap a sticker on, the 20% of returns that qualify. You've got to take those 20% and then, go through the fine tooth comb and make sure it works. So I think that's really important and really interesting to hear.
And there's a few other changes that came through too. The big one, and your people probably know all about this now, but your ability to get money out of your retirement account has gotten a whole lot better right now.
Mm-hmm. Yeah, no, I think that's important. And if you don't know about that and you do have an accountant, go talk to him, because it could be good for you. But I think that's a really great place to wrap up. I think I've definitely learned a little bit. I think we touched on a ton of great points. So Warren, thank you so much for coming on and sharing everything with us and with everybody listening. If anybody wants to get in touch with you, learn more about you, follow along, where can they do all that?
Well, the Taryle Accounting Facebook page is a great place. It's the first place I go with all of my updates. As soon as I get a new tax law break, I get all excited, do a live cast, or sometimes just put it on there. It's just an excuse to be a ham. But, taxes are cool and fun. But also our website, Taryle Accounting, it's tacpas.com. So TareleAccountingCPAs.com.
Beautiful.
And you come on there. We'll talk we'll do initial calls with people if they have quick questions and what. We actually have, and if you come to the website or the Facebook page, you can find it every Thursday afternoon at 3:00. We do a question and answer conference call. Not me, but the other accountants kind of take turns being on it once a week. And it's just for people who have quick questions. We don't have any curriculum we teach or anything like that. It's not private, so people have to be willing to let other people hear their questions, but and understand that we might not know who you are, but we'll give you the best answers we can. And if you come to the website or the Facebook page, you can find the call-in information for that.
Beautiful. And we'll be sure to have the links in the show notes below. Just for anybody that's listening and wants to go search it, how do they spell Taryle?
Taryle.
Beautiful. Guys, definitely go check that out. Go check out the Facebook group. I'm going to go follow because I'm sure I'm going to have questions and it'll be interesting to hear other people. But thank you guys so much for listening to this episode of the podcast. If you're not already subscribed, would love it if you would do so. It'd mean the world to John and I. And if you are, and you know somebody that you think would get a tremendous amount of value from this episode, please send it to a friend, family member, colleague. It would also be great and be appreciative from John and I. We've also just launched a Facebook group. You can check it out by going to facebook.com/group/the REI experience. No content, no agenda, just really trying to connect with all of you, learn from you, grow with you guys. So go check that out. Once again, Warren, thank you so much for coming on and sharing your experience and your knowledge. It was really tremendous.
Thanks. It was a lot of fun.